Let's talk about those little plastic rectangles in your wallet. Debit and credit cards. You use them everywhere. Coffee shops, grocery stores, online shopping. They make paying easy, but not all plastic is the same. Debit and credit cards look similar, but work very differently. Understanding this difference is crucial for your financial health. Most people just swipe without thinking. Is this my money, or am I borrowing? The choice between debit and credit can impact your budget, your credit, and your security. It's not just about convenience. It's about making your money work for you. We'll break down what each card does, how they work, and when to use them. No jargon, just the basics. Once you get the mechanics, you'll see why one card might be better for certain situations. This isn't about which card is best. It's about what's best for you. By the end, you'll see your cards as financial tools, not just payment methods. You'll know where your money is coming from with every tap and swipe. This knowledge helps you avoid fees, protect yourself, and maybe even earn rewards. Let's start with the card that's directly connected to your cash, the debit card. What's a debit card? Simple. It pulls money straight from your checking account. When you swipe, tap, or insert, the money leaves your account instantly. No borrowing, no bill later. It's your money, spent in real time. If you have $500 and buy a $5 coffee, your balance drops to $495 immediately. If you don't have enough, the transaction is declined. Debit cards also work at ATMs, letting you withdraw your own cash. There's no interest, no debt. You can only spend what you have. This makes debit cards straightforward and easy to manage. What you see in your account is what you can spend. Many people prefer debit cards for everyday purchases because they keep you within your means. There's no risk of overspending or racking up debt. Debit cards are simple, safe, and force you to live within your budget. They're a great tool for anyone who wants to keep their finances simple. But remember, you can't spend what you don't have. That's the fundamental rule of debit cards. Now, let's talk credit cards. Unlike debit cards, credit cards let you borrow money from the bank to make purchases. When you use a credit card, the bank pays the merchant, and you pay the bank back later. You get a credit limit, the max you can borrow. At the end of the month, you get a statement with your total charges. Pay it all off, and you avoid interest. Pay only part, and you'll owe interest, often at high rates. Credit cards are a loan product, and every swipe is new debt. They require responsible management. You have to apply and be approved, since the bank is lending you money. Used wisely, credit cards offer flexibility and rewards, but misuse can lead to expensive debt. It's a powerful tool. Handle with care. Let's compare debit and credit cards side by side. Debit cards spend your money straight from your account. Pay now. Credit cards spend the bank's money. Buy now, pay later. Debit cards have a hard limit, your account balance. Credit cards have a limit set by the bank, often higher than your cash on hand. Debit cards can't put you in debt. No interest, no bills. Credit cards can. If you don't pay in full, you'll owe interest, and debt can snowball. Debit cards don't affect your credit score. Credit cards used responsibly help build your credit history. Good credit is essential for loans, renting, and more. Debit cards are simple and safe, but don't build credit. Credit cards offer more flexibility and benefits, but require discipline. The key difference: debit is your money, credit is the bank's. Choose wisely based on your habits and needs. Let's look at the pros and cons of debit cards. Biggest pro: budget control. You can't overspend, your balance is your limit. Debit cards are simple, with no bills or interest to worry about. They're usually free with your checking account and double as ATM cards. But there are downsides. Fraud protection is weaker. If someone steals your card, your real money is at risk. Getting stolen funds back can take time, leaving you short on cash. Debit cards don't help build your credit history. If you only use debit, you're invisible to lenders. That can make it harder to get loans or rent an apartment later. Debit cards are great for simplicity and control, but don't help your credit. Use them for daily spending, but know their limits. For building credit, you'll need more. Credit cards come with big perks and big risks. Top benefit rewards, cashback, travel points, and miles can add up fast if you pay your balance in full. Spend $2,000 a month, get $40 back. Free money if you're disciplined. Credit cards also offer strong fraud protection. If your card is stolen, it's the bank's money at risk, not yours. Most issuers have zero liability policies, so you're protected. But the biggest risk is debt. It's easy to overspend and carry a balance. High interest rates can turn small purchases into big bills. Fees can add up too. Annual fees, late fees, cash advance fees. If you're not careful, rewards can be wiped out by costs. Credit cards require discipline. Pay in full, on time, every month. Used right, they're powerful tools. Used wrong, they're dangerous. Know your habits before you dive in. The rewards are real, but so are the risks. So, which card should you use? The answer, both, if you use them wisely. Use credit cards for online shopping and travel. They offer better fraud protection. Use debit cards for daily spending if you want strict budget control. If you tend to overspend, stick to debit for everyday purchases. But don't ignore the benefits of building credit. A smart strategy. Use a no-fee credit card for 1 or 2 small recurring bills. Set up automatic payments to pay in full each month. This builds your credit history without risking debt. If you're disciplined, use credit for most purchases and pay in full to earn rewards. If you want simplicity and zero risk of debt, debit is your friend. The most important thing, be intentional. Know your tools, their strengths and their weaknesses. Make your cards work for you, not against you. With the right habits, you'll stay secure, in control, and on track for a healthy financial future. That's how you turn plastic into power.